Good morning, traders. It's the 29th of March. We are Signal Centre Talking Bull. I'm Joe, joined by Steve this morning. How you doing, Steve?
Yeah, pretty good, mate. Thank you.
Good.
How are you?
Good. Yeah, all right. Thank you. Can't complain. Okay, let's get into it, shall we? Let's go through the latest headlines and then we will get stuck into some charts, have a look at how price action is setting up for the day ahead, and also what data points out today that we should be keeping watch for. So, latest headlines first up. US consumer confidence edges higher. The consumer confidence number strengthened to 104.2 for March from a revised number of 103.4 from the previous month, and that was comfortably above the consensus forecast of 101. There was a decline in the present conditions component, but this was offset by a recovery in the expectations index. Also, the Richmond Manufacturing Index is still struggling. The manufacturing index recovered to -5 for March from -16 previously, and this was above expectations of -10. Shipments moved into positive territory for the month, but new unfilled orders continued to decline. We had further comments from the Bank of England Governor Andrew Bailey yesterday. That follows on from the comments that we had on Monday. In his testimony to the Treasury Select Committee, he stated that the bank was in a period of very heightened tension and alertness and that the bank remained vigilant. He also added that credit conditions had tightened, but there was no major issue at this time. Overall, his tone did offer some reassurance to the UK financial sector. As a result of all of this yesterday, risk appetite held steady over the past 24 hours with further hopes that the banking sector has stabilised. In this environment, risk assets have maintained a more constructive tone and the yen posted sharp losses in Asia on Wednesday. Overnight, we had inflation data from Australia. The monthly Australian data recorded a decline in inflation to 6.8% from 7.4% previously, and this was well below the expectations of 7.1%. The data maintained market expectations that underlying inflation had peaked. There was a large draw in the API inventories yesterday. The data recorded a 6.1 million barrel draw for the week compared with expectations of a marginal build, and there was also a strong draw in gasoline. And we are starting to see some corporate month-end dollar buying. There should be some scope today for that ahead of Friday's month end. So typical kind of positioning ahead of the month end can often create some volatility. So that's something we need to be aware of. So we're going to get stuck into some charts now. As always, if anybody wants us to take a look at anything from an unbiased perspective, give us our thoughts on the markets and how they're shaping up at the moment, please feel free to post them up. We've already got one request in this morning from Mox to take a look at sterling yen, which we will get to. But Steve's going to run us through some cryptocurrencies to start.
Yeah, excellent. Thanks, mate. Yeah, Bitcoin is holding on to the gains really over the last that we've made over the last couple of weeks. Let's take a look at the daily chart. We've got this huge area of resistance. We can see this is all the way back from May to June last year, and we've stalled in front of that and tried desperately to break above. Still a bit of potential here. You can see this bottoming formation that's been formed with this the last dip down on the 10th of March being bought into in this morning star formation, and the projection higher has stalled around here. So yeah, we've got at the moment we have got support around about the 26,670 level. That's the level to watch on the downside. A break below there should see quite a quick acceleration downwards. There's really that you'd expect some sort of vacuum of trading. As you can see previously, we had how this market has reacted between those levels has been sort of like pretty sharp. So that's the level to watch on the downside. If you're long, you know, having a small stop below there wouldn't be a bad idea. On the upside, we've got this huge level of resistance to work our way through. Now, obviously, things like this can be can take a long time to sort of like to push our way through it. But yeah, it's sitting there, it's primed, it feels ready to go. There's definitely been a lot of risk on in terms of cryptocurrency over the last couple of weeks. Ethereum has bounced once again from that 1730 level. We actually got down to 1688 yesterday, well, Monday, and then yesterday's bullish engulfing almost candle has seen a projection higher this morning as well. Resistance around about the 1850 level in Ethereum. XRP has managed to break the resistance at 50 cents. So that's where we got up to. What day did we do it? Tuesday the 21st, and we've extended higher again today. So this looks more like a bottom than anything else, but really focused on the next level of resistance, which actually we can sort of take from all the way back here. We can see that on January last year, we had a spike down, broke through it eventually in May, and retested that level in September and October last year. We're approaching that level now around about 56 cents. So they're the levels to watch in XRP. Moving into commodities, well, let's take a look at gold first. And again, this is the daily chart. We can see the price action yesterday saw prices move higher. We eventually, the high of the day was 1975, and then we've given up those gains overnight. So let's take a look at the shorter term chart, see exactly where we're going. Yeah, we sort of like bounced off that support 1945 and topped out 1975, and over the last 12 hours we've started to move lower again. Looks like we're posting higher lows, so it's not necessarily a bad thing that we're seeing these like tests of the strength of the upward trend, and this Ichimoku cloud giving us a nice little visual way of seeing how that trend's working out. So currently it looks like we're in an ABC correction, so really this feels like a C leg, but there seems to be a lot more going on after buyers coming in front of that 1935 support, now a 1945 support. Looking at crude oil, this has remained elevated this week, and we've seen price action extend once again after the rally we saw on Monday. Very aggressive rally higher. We seem to have sort of like be stalling around about this $74 area in WTI crude oil. That's the level to watch. 73.90 resistance coming in, and 61.8% fib is coming in at 74.60. That'll be a real test of this move higher. But you can see we've broken up through the cloud resistance and forming a nice base pattern also. Potentially getting to the top of that base pattern, we can see this plethora of sort of resistance that we've had in the past at these levels. Brent crude oil is trading just under a $5 premium to WTI crude oil, but similar sort of price action. You can see this inverse head and shoulders type formation, which is breaking higher, and yeah, looking at, we've just taken out the 50% fib retracement, looking at really target maybe that 61.8, which is around about $80 in Brent crude oil. And finally, natural gas remains under pressure. We're retesting that 210 low, which we got back in February, and been down to 213, is it? Let me see. Yeah, 213.60. And yeah, remains under pressure, natural gas. There doesn't seem to be anything that's able to support this bad boy. We've been up to, we sort of like had a bit of a pullback to that 236 level more recently, but once it got there, it posted another lower high. So yeah, remains under pressure. I'll take a look at the indices in a sec after Joe dives into FX.
Very much, Steve. So let's kick off with the dollar index as usual, and I need to share my screen actually. Let's do that first. Okay, Here we go. So we know we started off the week with a gap on the dollar index, and that remains unfilled. We can see that there at 102.83. So we are moving higher today, up by 0.3%, potentially attempting to fill that gap. Will be interesting to see if we get some reaction at that point. It could attract some fresh selling interest and potentially drive the price lower in the very short term. Ultimately, we are still in a downtrend with the dollar index, so we can expect to see maybe lower prices, but it'd be interesting to see, as I said, what kind of reaction, if any, we get at that gap. So yeah, bit mixed on dollar index for now. Let's take a look at euro dollar. We can see that that continues to stall at this resistance here at 108.85. We posted this shooting star candle on Thursday last week. Prices have rallied over the last couple of sessions, but coming up a bit short today. And moving slightly lower. So potential for a drop lower on that, unless of course we can break through these highs that we posted on Thursday, then that could trigger at the very least a rally back to these highs that we posted. So it's a bit of a mixed bag with regards to the outlook on dollar and dollar related currencies. Let's take a look at cable, see what's happening there. We posted some strength yesterday, so indicative that sterling is looking quite good at the moment. We actually didn't quite manage to get above the high that we posted on Thursday yesterday, and we are pulling back ever so slightly today, down by almost 0.25%. So minor pullback there in the short term. Following the break of this wedge, it does look to be in corrective mode and potentially looking to target these previous highs that we posted between 124.30 to 124.47. So sterling at the moment looking reasonably robust. I guess the comments yesterday from Andrew Bailey seem to have helped. Let's take a look at dollar yen. That's up by 0.84% this morning. So sharp weakness in the yen currencies. So we can see the dollar being positive this morning is also helping. As things stand, we are engulfing yesterday's losses. Long way to go on the session, but there clearly appears to be some support between 129.13 to 130.56, and that may indicate higher prices towards 135.93. On the commodity currency side of things, again, Aussie continues to be trapped by this resistance level at 67.16. We've been talking about this for the last few sessions. We saw a couple of wicks trying to move above these levels, which ultimately failed. Yesterday, we posted a decent day, but we are giving up some of those gains as things stand. So kind of got two arrows drawn on here to indicate that really it's kind of make or break. If we can get a break above this 67.16 level, it could trigger further gains to the upside and kind of in line with this wedge pattern that we've got on the chart. If we continue to see a failure here, then we may drag down towards 65.47 to 65.20. Just to wrap up some of the other majors quickly, we can look at dollar Swiss price action. Broken out of this wedge here, but then prices never really accelerated to the upside. In fact, they pull back to kind of test these lows again. So pretty choppy and sideways on that at the moment. No real opinion on that as it stands. If we look at dollar CAD, we can see that prices failed into resistance here at 38.37 and then started to move lower. So it looked as though maybe we were forming some sort of continuation pattern here. And I was looking really for a nice kind of breakout of this to the upside, but it never actually happened and in fact has broken down. So that may be indicative of further losses in dollar CAD in the short term. Finally, on the dollar majors, let's look at New Zealand dollar. We can see we saw a breakout of the wedge here, no real impulsive move to the upside, and much like Aussie versus US dollar, we're being capped by a pretty significant resistance level in the short term. This is at 62.75. We've made a couple of attempts to break through, but nothing yet, and prices are very choppy and sideways within quite a tight range at the minute, between 61.91 to 62.75. Okay, there's a request to take a look at sterling. I've looked at dollar CAD, Ali, so hopefully that was good for you. Now we will look at sterling yen. And so the view on this is that clearly we're in a downtrend, and we can see here that on previous attempts at trying to break through this downtrend, prices have been rejected at this level. We've also got a 38.2% fib level and a 50% fib level across multiple timeframes here that seem to be doing a job at preventing prices from moving higher. And what has been identified here is that each time it's got to this level has resulted in price decline. So are we going to see the same thing again? Well, if we go by what history shows us in recent times, that's been a pretty good strategy to adopt. So we're bang into that level again today. Is this an opportunity to sell it? based on what we've seen so far? Possibly yes. But where can this potentially get to in the short term? So looking at this from an intraday perspective, I've just got some levels on here that may help. So from this previous swing high that we posted on the 28th of February down to these lows, we've got 61.8% fib level coming in at 163.04. And we also have the volume point of control currently coming in at 163.35. We've also arguably got a level in here. So prior to this breakdown here, we've got an untested level which comes in at 163.02. So for me, I think that would be a reasonable area to consider thinking about shorting. Obviously, you're going to have to give it some room because you've got this swing high here. We've also got the volume point of control. So ideally, you'd have a stop maybe above these highs here. And then if you were going to target a decent pullback in line with the trend, maybe you could look for a move all the way back to those lows. So from a risk reward perspective on that basis, it looks quite attractive, around about 4.25 to 1. Let's just see if we've got a short-term downtrend line here as well. I imagine we're going to be testing that, if not breaching it. And yes, we are. So yeah, looks quite interesting, I think, on that basis. So a nice spot there. I think that's it for the currency, Steve. So I'll leave it there.
Sorry, I missed dollar CAD. Did you do that?
Yeah, I did do dollar
Yeah,
CAD.
excellent.
Yeah, I went through all
All
the
right.
majors.
Cheers. I'll take a look at the indices now. We're looking at FTSE to start with, as we normally do, and this is a 4-hour chart. We can see that price action looks to have formed a bit of a bottom in this inverse head and shoulders formation, and we're breaking now through that Ichimoku cloud, so that downtrend seems to be negating. We've still got a little bit of work to do, really, to sort of convince me of this. 75.93.5 was or 75.92 was with the high on the 22nd of March. That's the level for me that would sort of be significant if we manage to close above there on a significant basis, i.e. a 4-hour close or a daily close. Support below coming in around about the 74.50 level, a break back below there, and we're under pressure again. But at the moment, nothing really sort of like seemed to be standing in the way of the indices on this risk on approach. DAX Germany 40, similar sort of price action. Again, you can see this bottoming formation that we're playing out here. Resistance just above the 15,300 level, and just 100 points away, really. Support, interim support around about 15,000, which would be quite a nice psychological area. And again, we're through that 4-hour downtrend, so there's a few sort of buy signals being fired based on a few of these technicals. Overall, the Elliott wave saying that the ABC formation is complete and potential for the next phase of the markets. Looking at US 30, so this is the Dow, the double bottom formation attempting to play out again. We had a little bit of a pullback in last Friday, got down to the well, posted at a higher low from this double bottom formation, and moved higher from there, back above the 4-hour Ichimoku cloud and resistance levels. We had that spike from when the 22nd of March. If we take that out of it, 32,600 seems to be quite a key level. We're not far away from there, only 50, 60 points away from there, and looking to retest that and potentially move higher. It's looking quite supportive overall on this structure. NASDAQ, the tech side of things, has stalled and moved into this ABC correction. Looks like we're completed the A leg, looking for now a B wave correction higher before seeing the extension lower. And again, price action that really sort of like this 4-hour trend dominating and supporting the market as we move into the second part of the week. Support would expect really all the way from 12,400 all the way to 12,525, and this cloud offering that support, and you can see that it projects the support forward, so that's what we're seeing, and resistance all the way up at, well, the main level of resistance coming in at 12,959 below the 13,000 level, so quite an important one to watch. S&Ps levels to watch here, support coming in where the 4-hour cloud is 39.54, and below that 39, the the figure, and above we're looking at 40.40 or 40.50 being quite key as a resistance level. So we're trading at that 4,000 pivotal level, which seems to act like a magnet over time. Always seem to sort of like find our way back here in some way, shape or form. But at the moment, indices looking quite comfortable. How long will it last, Joe? I don't know. It's yeah, we'll
Maybe
have
to
to
the end
just
of the
wait and
month.
see out. Potentially, yeah, that would be sort of like a nice little end of the month, end of the quarter. Why not?
Yeah,
Yeah,
maybe.
so yeah, could be. Yeah, so yeah, we'll leave it at there. We've seen sort of a lot of volatility over the last couple of weeks, and now just seems to be a little bit of a slow grind higher. I think there'll be a lot of people out there looking to sell into rallies, but
Yeah,
yeah,
quite possibly.
they
Okay,
don't
right.
stand
Well,
in the way of the
let's
train.
no. Let's look at the gun to the head trades then. So this is where Steve and I pick trade ideas live on the video with our live account. We put £2,000 into a trading account at the start of the year. A couple of rules that we need to follow. Basically, both of us need to have stops and targets, and that's a given. We also need to have risk reward ratios of 2 to 1 or better. The trades are closed at 9 p.m. unless the stops or the targets are hit. We've got an expert advisor basically on the account that will basically close these trades out at 9 p.m. So we don't have to worry about the management of them. And we risk 1% of capital per trade. Obviously, we are a little bit limited in what we can do due to the size of the account. Some of the contracts we can't really do because we can't risk 1% of our capital. It actually ends up being quite a bit higher, and we're restricted on some assets like cryptocurrencies because it's a UK account. Which is regulated by the FCA, and as a retail customer, which we're down as, or officially we're not, but for the purpose of the account we are, so we can't trade crypto. But Steve, let's have a look at some ideas. In fact, let's have a quick recap on what we did yesterday. So you were trading gold, is that right?
That's right. Yeah.
And you were stopped out on that. Let me just see if I can bring that up. Not to rub salt in the wound or anything, but just to
Yeah.
keep
Feels
ourselves
like.
honest. Sorry, mate. So this is Steve's gold trade, which is published up to TradingView. So looked as though it was going to start rolling over to the downside. So you obviously see the reason behind that, but saw a pretty decent push to the upside throughout the session. And I looked at Euro Stocks 50 yesterday. The trade rallied into some resistance here, which I looked to target the entry at, and was on side just under 1R at the close. So
Nice.
collectively, we sort of cancelled each other out basically. So nothing lost, nothing gained. So let's reload the gun and have another go today. Is there anything that's standing out for you this morning?
I don't know if we can get a natural gas trade on. Maybe we can. It's at quite a key level, Joe. If we look at the weekly chart, you can see even if we go all the way back to 2021, even sort of 2019, you can see there is a sort of like reason to maybe fading this bearish trend, but are we a bit foolish to do so? There's a big gap on the chart here that we've talked about between December and January, so that over the new year we had this big gap on the chart. Oil has been supported this week. We've got oil inventories out later. I think the natural gas inventories come out tomorrow, so maybe I'll leave that alone. Yeah, struggling a little bit, Joe, to really sort of like find anything. As I said, with this gold trade idea, it feels like we're a little bit stuck in the middle at the moment. I like the level at 1935. I'd like to trade around there. Around the 2000 level, I'd like to trade around there. But we're sort of in the middle of that range. So I'm a little bit nervous as to what to do with this. We've had a little bit of a sell-off on the hourly chart. Potentially, are we posting higher lows? Listen, the hourly chart is posting quite a nice positive candle at the moment. We've still got 35 minutes, so that could change. I'm tempted to go long of this, actually. So let's do that. As you haven't said anything, I thought you were going to say, I've got one, Steve, and then you're going to
I have got
save
one, but
me.
you were going for it with gold, so you were going for gold. So I didn't want to
Going for
stop
gold.
you.
Could sing a song about that, I suppose. So yeah, I'm going to look at gold. I'm going to be quite aggressive with this. See if we can get back up to that 1975 level. It's only a 2-to-1 risk reward, but I'll try and get it on it anyway. Again, this is one of the orders that we might. We want to buy it. We want to take profit, stop loss. 1% is targeting. Let's target move to 1975. Stop at 1954. That doesn't give us very much risk reward, does it at all? So that is more like it. It's quite a tight stop, isn't it? It's stops at 1956. And the target is at 1975. And we're getting in there. So 2.4-to-1 risk reward, looking for a return back up to that high there after posting a bullish hammer. Hopefully on, actually, is it on a 30-minute chart? Has it posted a bullish hammer? Yeah, it looks like it. So yeah, go for that, Joe. Go for a little bit of a push back higher, posting these higher lows in gold.
Okay, cool. I'm going to take a look at Canadian dollar versus a Swiss franc. So a little bit exotic compared to what we normally look
you
at.
don't mind, do you?
No, just seeing something on there that tickles my fancy. So I'm going to take a look at that. Let me just bring my chart up while Steve gets that in position for a trade. So let's just take a quick look at the daily first of all. So we can see there's pretty horrific downtrend on this, to be honest, over a fairly long period of time. We can see there's been a number of kind of consolidation / continuation patterns that have formed along the way as well. The most recent one being this kind of triangle pattern. We saw the prices break to new lows. And we can see there that the resistance that was broken down at 67.75 is now acting as some resistance. So for me, that looks like a pretty good opportunity to sell into this strength, given that the overall trend remains very negative. If we take a look at the intraday charts, just a short-term kind of swing move here from the highs that we posted on Tuesday the 21st down to these lows on Friday the 24th. We've corrected towards a 78.6% fib level and stalled pretty much bang on it and posting a bit of a reversal candle now. 31 minutes to go on the candle before we can confirm that, but I've got a gun to my head, so I've got to go for it now. So I'd like to sell that market with a stop loss at 67.81.
Yep.
And the target is at 66.87.
Okay, about 3.3-to-1, is that right?
About 3.3-to-1. That will do very nicely.
There we go, that's on.
Okay, so I'll get that published up to TradingView.
Make sure you move your little marker.
For 9 o'clock, yeah.
Yeah, make sure you move it over to the left so it shows that it's triggered, so it tracks it quite nicely then.
Okay, done. That is done. Okay, so the trade's on. We can see that on Steve's account as well. We've got, well, down 1.62 at the moment, and Steve's down slightly, just paying the spreads and the fees for those. So let's see how they go today. Okay, data-wise, a couple of bits out today, not an awful lot on the calendar. The main ones being the US crude oil inventories, and then we've also got some further comments from the Bank of England today. One of the members, Mann, we're making some comments at 5 to 8 this evening. And tomorrow we've got German consumer prices, so latest read on inflation in Europe's largest economy. And then on Friday, we've got Chinese PMI data, as well as Eurozone inflation data and some further US data on the inflation side of things, the PCE prices index. So only a couple of bits today to watch out for. Volatility seems to have subsided a little bit in the short term, but it's only one negative headline away from returning. So be careful out there, guys.
Cheers, everyone.
Yeah, we'll wrap it up and see you tomorrow. Bye-bye.
Bye.